Welcome back to another explainer. Today, we're taking off our casual tourist hats and, well, we're putting on our macro strategist lenses. We're looking at Airbnb, but we're absolutely not just looking at it as that app you fire up to book a weekend cabin or a spare bedroom. No, we're analyzing a complex global travel liquidity engine. Airbnb is going through this massive structural transformation right now. They're shifting from being a simple vacation rental disruptor into this much broader marketplace for stays, experiences, services, and AI-assisted trip planning. It's a truly fascinating, data-driven evolution. So we're going to break down exactly how their core logic is colliding head-on with global housing politics, and more importantly, how they actually plan to survive it. Okay, let's dive right into this. Here's our roadmap for the explainer. First, we'll look at the structural shift in global travel demand. Second, we'll unpack Airbnb's flexible supply engine. Third, we're going to confront the regulatory compliance ceiling, which is, without a doubt, the massive roadblock they're facing right now. Fourth, we'll look at their strategic pivot to bypass those constraints. And finally, we'll redefine their intrinsic value to see how we should really be measuring their financial health moving forward. All right, part one, the structural travel shift redefining global demand. Listen, travel has fundamentally changed. Those predictable, seasonal patterns of the past, they're gone. Global demand has structurally shifted. 50%. Let that sink in for a second. In the fourth quarter of 2025, Airbnb saw a massive 50% year-over-year growth in nights booked out of India on an origin basis. I mean, this isn't just a minor statistical bump, right? This is an explosive data point. It's hard evidence of Airbnb's intense momentum in expansion markets. The mature Western corridors? Yeah, they're maturing. But the real velocity, the real growth, is happening right now in places like India, Brazil, and Japan. So what's driving this aggressive growth? It's structural shifts in demand. Travelers just aren't settling for standard hotel rooms with a tiny desk anymore. You know the ones. Instead, people are demanding a dynamic, highly flexible travel experience. We're seeing a massive rise in the need for flexible payments and cancellations. Also, international outbound recovery is happening, sure, but it's highly uneven across different markets. Plus, younger travelers are entirely ditching traditional search methods. They want mobile, social, and AI-driven interfaces, and they are really craving local experiences and integrated services. And here's the kicker. In several major hub cities, this fragmented experiential demand is radically outpacing the legally available short-term rental supply. Which brings us to part two, the flexible supply engine, or Airbnb's core logic. How exactly does a company capture and monetize all this rapidly shifting, fragmented global demand? Let's take a look under the hood. It fundamentally comes down to a central tension. It's the flexible supply model going right up against the demand for regulatory certainty. Think about it. Traditional hotels sell standardized rooms in fixed, predictable locations. That provides certainty. Airbnb, on the other hand, sells flexibility. They offer apartments, cabins, villas, long stays, remote work setups. It's incredibly adaptable to all those demand shifts we just talked about, but here is the major friction point. This flexible supply creates immense regulatory tension. I mean, a residential home can be a lucrative vacation rental one day and a literal neighborhood nuisance the next. So while Airbnb's core offering is incredibly flexible, local city regulators absolutely demand certainty. Despite this deep tension, Airbnb relies on this really powerful business logic to keep growing. We call it the liquidity flywheel. Here's how it works. More hosts join the platform, which creates more supply. This highly diverse supply improves guest choice, which naturally drives more bookings from travelers. Those bookings generate reviews, which builds systemic trust and significantly improves conversion rates. And finally, that higher conversion supports the platform's fees, generating revenue. It's an elegant, self-reinforcing marketplace engine. This liquidity flywheel hums along perfectly and prints cash, right up until it hits a regulatory roadblock. Okay, part three, the regulatory compliance ceiling, the antithesis. We kind of have to shift our tone a bit here because we're now looking at the single biggest existential threat to Airbnb's flexible supply model. Honestly, this isn't about competition from other travel apps. This is about global regulatory crackdowns. We call this the regulatory hammer. Just look at New York City's Local Law 18. We're talking sweeping mandates requiring hosts to register locally, strict prohibitions on booking platforms from processing transactions for unregistered rentals, and severe caps on entire home short-term rentals under 30 days. Then there's the massive EU data sharing regime, which comes into full effect on May 20, 2026. This forces platforms to systematically hand over detailed collection data to authorities. It essentially gives local governments unprecedented visibility and the exact tools they need to strictly enforce local housing policy. The core issue driving both of these actions? It's direct collisions with local housing availability, neighborhood noise complaints, and of course, direct competition with local hotels. Now, what's really interesting here is that this creates a foundational macro concept that every investor absolutely needs to understand. We call it the compliance ceiling. The compliance ceiling is the exact point where adding more travel demand to the platform no longer generates any revenue growth. Why? Well, because the legal lodging supply simply cannot physically or legally expand in that specific location. It is a hard, artificial cap on growth, and it's dictated entirely by local municipal laws, rather than by consumer interest or platform capability. And because this ceiling is dictated by thousands of different local municipalities worldwide, we arrive at a pretty sobering conclusion. The regulatory risk cannot be eliminated. No matter how good Airbnb software gets, the physical, legal constraint of regulation will always remain. Moving on to part 4, bypassing constraints, the pivot. Look, a sharp macro strategist doesn't just stare at a roadblock. They analyze the detour. Airbnb's management knows they can't just eliminate this risk, so they are actively maneuvering around this ceiling instead of just waiting to suffocate in supply-constrained markets. So how are they expanding the platform? Well, to survive highly constrained cities like New York, San Francisco, and Madrid, Airbnb is actively integrating boutique and independent hotels directly onto their platform. That solves the immediate legal supply problem. Simultaneously, they're expanding their footprint into less heavily regulated global markets like Brazil and Japan. Add in advanced AI search capabilities for highly personalized trip planning, plus a much deeper push into localized experiences and services, and you can see they're fundamentally transforming from a housing marketplace into a comprehensive travel aggregator. This really illustrates a massive, historic shift in their corporate identity. As the quote says, Airbnb is no longer only anti-hotel. It is becoming a broader travel demand platform. This completely reframes everything we know about the company. Think about it. For over a decade, they were the ultimate hotel disruptor. That was their entire brand. Now, by deliberately bringing compliant boutique hotels onto their platform, they are directly solving their local supply constraints. They are prioritizing compliant supply to capture their massive demand, shifting away from being merely a disruptor to becoming the central, compliant hub for all travel booking. Finally, part 5, redefining intrinsic value. Given all these massive structural shifts in travel demand and local regulation, how should macro analysts and everyday investors actually read Airbnb's financial health? So the crucial point is that traditional surface-level financial reads simply aren't enough anymore. Let's look at what actually matters. Nights and seats booked, that's your pure volume and baseline growth. Gross booking value, or GBV, is your leading indicator combining volume and pricing power. The take rate shows exactly the percentage of value Airbnb extracts from transactions. Adjusted EBITDA measures operating profitability specifically against their heavy investments in AI and municipal compliance. And free cash flow demonstrates their incredible asset-light cash generation capability. But here is the massive warning. All of these numbers look incredibly strong right up until the exact moment a major city suddenly bans short-term rentals and removes legal supply. You absolutely must read regulatory risk as a core operating metric. And that is exactly why traditional valuation models fail here. It's deeply flawed to value Airbnb merely as a traditional hotel chain because, well, they don't actually own most of their physical supply. But it's equally flawed to value them as a pure software company because their entire revenue relies on physical, heavily regulated residential housing, not just digital inventory in the cloud. The better framework? Value them exactly as what they are evolving into. They are an asset-light, regulated housing-adjacent platform compounding cash flow. They sit squarely in the messy, profitable middle between digital travel demand and physical, highly regulated residential real estate. Which leaves us with the ultimate multi-billion-dollar question. Can Airbnb grow global demand faster than regulation restricts legal supply? If their strategic pivot succeeds, if they master the integration of boutique hotels, AI trip planning, and new global expansion markets, their marketplace will continue to compound brilliantly. But if they fail to bypass the compliance ceiling, all that vast, flexible global demand will simply leak right back to traditional hotels and legacy online travel agencies. It's a high-stakes race between global tech innovation and local municipal regulation, and the outcome is going to redefine the entire travel industry. Thanks for joining me on this deep dive, and I'll see you on the next explainer.